Hello and happy Friday to you. Wanted to reach out to you. For those of you who've been looking for these weekly updates, I apologize. We've had some technical issues and we've shifted some systems in terms of how we're getting it out there. I think we've got it all ironed out now. You should be seeing them every week, every Friday. That's not a holiday, so you won't see it next week, but the weeks that follow, you will. And the whole goal of these, again, is just to update you on the market a little bit, what's going on with lending, what's going on with interest rates, and what things you might be able to capitalize on to get more clients. And so for today, interest rates are just down below. I'll talk a little bit more about those in a minute. Also down below is the link for the TalkJet interview. It's a download. You can download it and listen to it at your leisure. It's an awesome one this month. It's Michael Mayer. For those of you who don't know him, he's the author of 7 Levels of Communications, and he's awesome. Realtor, a coach. He's lit the world on fire. I listened to him about 2 years ago for the first time. Made a huge difference in how I do business. I got his book as well. I would encourage everybody, go get the book, get his e-zymes. Everything's great. Definitely listen to the download and the interview with Bill Hart, which is down below. Also, there's a Word doc which kind of gives you a brief rundown of the topics for that conversation attached. So to talk about the market, rates, if you notice, are down a little bit, which is great. We love that. Low rates are good. Could be short-lived, but I don't think it will be. I'm expecting rates to stay fairly low for the rest of the year, maybe even tick down a little bit lower, an eighth, maybe 1/4% at the most. They could obviously go up that much too, but I think there's probably more propensity for it to go down than up, just to give you that heads up. But definitely a great time for buyers to get out there. Homes are only getting more expensive. Rates are only going to be higher down the road. Let's get them out there and get into homes. With regard to the market, there's a yin and yang shift going on between conventional loans, Fannie and Freddie, and then also FHA and VA, so all the government-backed loans, and private financing. If you recall, subprime, and that word I know is taboo, but subprime, all that means is anything outside of those boxes of Fannie, Freddie, of conventional loans, and the government loan programs as well. That's where private money comes in, and we haven't had it in a while, and our economy needs that to some degree. And so what's happened is Fannie and Freddie have kind of restricted a little bit on what they will and won't approve. The underwriting engines that we have to run loans through on those, where we got an approval probably a couple months ago, they shifted that. About 1 month ago, they made a change. And now those same files are getting either a refer or even a denial. And they're the ones that are borderline cases that have multiple layers of risk. Things like, low credit, no assets, they're using down payment assistance. When you get those things in combination, those are the kind that they're really stepping back from. High DTI is definitely kind of gone by the wayside. So while it's good in a way because we have to be fiscally responsible, it's also opened up a percentage of the market which is available to private financing that's a reasonable risk. Now, somebody who doesn't have any credit and no money, that's not a reasonable risk. But somebody who has proven themselves, who maybe doesn't have ideal credit and or has a lot of assets, can get into homes now, whereas before they couldn't. So if you have somebody that kind of you thought, gosh, as a make sense loan, this should work, this buyer should be able to get a house, and couldn't before, have them call me. There might be some programs out there now in the private market that they can get into. Now, some of them, there's even a stated income. Yeah, I know, I said stated. It's not what it used to be, thankfully. It's for self-employed borrowers only. You have to have a ton of assets, a ton of equity. You have to have great credit, and your rate's going to be in the 7% level. But it just goes to show you there are some of those programs out there. Now, whether everybody wants one, I don't know, but there are some programs coming back a little bit. So I'll keep you posted. We'll have to see where this shift goes and how far it swings, but the pendulum has swung a little bit. So just be on the lookout for more programs coming out, and if you have any questions, let me know. Along with that, there are some more down payment assistance programs that more are the government-sponsored or local government, the grants and that kind of thing, community programs. Those are more prevalent now, so definitely if you have somebody in that ballpark, let me know. I'm happy to talk to them. We try to get as many of those programs in the house as we can, and we've been fairly successful at it. So definitely Citywide Home Loans is a leader in that, and I'm very proud of that. Lastly, with the law changes going on, one of the most significant is going to be that the HUD has to be out 3 days in advance. We've all heard that law is coming next year. Just to let you know what we've been doing as a company and then as my team, we've been trying to meet that goal now. On my team specifically, when Denina came on board, one of the chief tasks of hers is to get a HUD a week ahead of time of closing. Now, she had to get used to our systems. We had to kind of get used to each other. We had some hiccups along the way for sure, some growing pains. But in the last month, just to give you an example, 5 out of our 8 loans, we had the HUDs 1 full week ahead of time. So it is really happening. We are really getting it. We're not perfect. We don't get it every time. There are some circumstances that still come up. But by and large, we're more consistent at it. And we're going to keep improving. So just so you know, we will be ready. We're already trying to do it now, and our standard is certainly higher than the minimum of 3 days. It's not to say it's going to happen every time, but we're certainly working on it. And then lastly, I just want to say happy Thanksgiving to you. For those of you who know me, this year has been an up and down. I've had some struggles financially or personally as well as professionally. I guess financially falls into that. I've had some really great wins as well this year. You know, when you take the wins and the losses, I feel really good about the year, even though it's been a bit of a struggle. It hasn't been easy, but it's certainly been what I would call a prosperous year, and I hope next year is even better. And for all of you that have helped me along the way, whether it be just your support and friendship, certainly business that we've done together, I just wanted to say a very sincere thank you. I don't think we do that enough, and given that it's Thanksgiving, there's no better time to say it. So thank you, and I hope you have a great holiday and great time with your families. And just so you know, I will be around, so if you're working, feel free to give me a call. I'll be around if you need anything. Hope you're doing well, and until next time we send this out in 2 weeks, I'll talk to you then.